Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have your company again here at Ausbiz as we get across those market moves overnight. Equity markets gaining despite a widening Middle East conflict which has disrupted shipping at the mouth of the Red Sea, sending oil prices higher. On Wall Street, investors shook off those concerns and President Trump's new tariff battle, with the main indices closing higher. The Nasdaq boosted by a rally in semiconductor shares, with the Philadelphia Semiconductor Index up more than 5% in the session. Leading the S&P 500 were large gains made by SanDisk, Western Digital and Micron. General Motors lifted its earnings outlook for the year after posting a 30% increase in second quarter profit on the back of profitable SUV and truck sales. 3M shares rallied after the industrial giant lifted its full-year profit forecast, and Hasbro surged after it raised its annual revenue and profit forecast, betting on demand for its digital gaming products. Nevada split second quarter profit forecast and kept its 2026 outlook unchanged, saying one-off benefits that helped the quarter would reverse as it increases research and launches spending in the second half. Danaher shares sank after the life sciences firm trimmed its revenue growth outlook and reported weaker than expected revenue in its biotech business. And oilfield services provider Halliburton fell after a forecast weaker third quarter revenue and flagged uncertainty about the pace of recovery in the Middle East. Well, let's turn to the Middle East, and threats from Yemen's Iran-aligned Houthis has seen two oil tankers carrying Saudi crude to Asia reverse course in the Red Sea, as the widening Middle East conflict now disrupts shipping through two of the world's most critical energy choke points. However, President Trump has said the Houthis had not yet shut the Bab el-Mandeb Strait leading into the Red Sea and threatened to act against them if they did. Well, US forces bombed targets in the south and west of Iran overnight, while Iran targeted US sites in Bahrain, Kuwait and Jordan, and a tanker was hit in the Strait of Hormuz at the mouth of the Gulf. On the trade front, Canadian Prime Minister Mark Carney has said he and President Trump agreed to ramp up trade negotiations. That's after the President announced plans for 50% tariffs on a wide range of imports from Canada in retaliation to what he described as discriminatory treatment of American-made cars, alcohol and dairy goods. Well, the benchmark 10-year US Treasury yields have reached two-month highs on fears of higher oil prices fueling inflation. The 10-year up to 4.63%, the 2-year at 4.26%. Meanwhile, a Reuters poll of economists is forecasting that the Federal Reserve will keep its key interest rate steady for the rest of the year. Australian 3-year government bond yield futures rose to 4.57%, the 10-year is above 5%. And the US dollar index up around 0.1% on the session. The Aussie is trading at 70 US cents. Oil prices have climbed to a 5-week high on concerns that energy supply disruptions could worsen in the Middle East due to a threatened naval blockade of Saudi Arabia by Yemen's Houthis. Brent futures rising 2%, settling above $91 a barrel. The gold market shows optimism on news of a proposed ceasefire put forward by Qatar between the US and Iran. Spot gold rose more than 1.5% at around $4,075 an ounce. Copper futures were up 3%. Iron ore fell around 1.5% to $99 a tonne. And Bitcoin, it's currently trading close to $66,500 US dollars. Well, semiconductor stocks have become the market's biggest drivers, but after an extraordinary run, investors are asking whether the AI-fueled rally is becoming too concentrated. To unpack it all, we're joined by Anu Ganti, who's the head of US Index Investment Strategy at S&P Dow Jones Indices. Anu, welcome back to you. Certainly a lot of volatility we're seeing among those semi stocks. I was just mentioning overnight, of course, our time, we saw that Philly semi index up 5%, but has taken a tumble since its highs in late June. I think it's off about 20%, so technically in a bear market. Why are we seeing that volatility at the moment?
Yes, excellent question. It's great to be here, Andrew. And you're right. It's been so choppy, this market, the S&P 500, was down last week. It was down again yesterday. We saw the recovery today. And at the heart of it, that's exactly right. It's the chip makers and the semiconductors driving this volatility. If you look at our S&P Semiconductor Select Industry Index, we're down 15% for the month. And after the stretch of outperformance that we've seen so far this year, the question is, are we starting to see another rotation in the market? Because after looking at the past couple of years of outperformance within the mega cap space, within hyperscalers, we've seen that switch of outperformance driving across the AI value chain to the suppliers, to the semiconductor space. And we're seeing this in the US, we're seeing this within Korea. But of course, it's not without its share of jitters and volatility, which is just sparked from Korea all the way to the US. So top of mind right now, of course, is big tech earnings season is upon us to see whether these companies will match these increased scrutiny that we're seeing upon them.
Yeah, just illustrated obviously by that chart we just had up there with the S&P Semiconductor Select Industry, almost going vertical since March this year. So, Anna, you mentioned similarities there with Korea. Did Korea actually start this volatility we're seeing there at the moment? Of course, that's dominated by a couple of key companies, certainly SK Hynix being one of them, having recently listed on Wall Street.
Of course, and it's sort of the chicken and the egg question, right? Because these two markets are so interconnected. Of course, with the recent ADR listing of SK Hynix, we saw some recent volatility there. But it's interesting to notice the parallels between the two countries. If you look at the share of weight of semiconductors, it has grown in the S&P 500 to roughly 19%. It's actually the largest industry group right now, which is pretty fascinating. Of course, you're looking there at some of the top performers, chip makers in the US and Korea. And while the US is relatively smaller in terms of weight, the growth rate has actually been higher than that of Korea, which is pretty interesting to see these parallels. But you're right that semiconductors and their share of weight in the index has been growing. We're seeing the exact same thing within Korea, with the semiconductors weight at roughly 29%. So these countries like Korea and Taiwan that have a greater share of technology, a greater share of semiconductors, have been the driving force in emerging markets as well as U.S. equities. And we've actually seen a retreat from other countries. Some of the big darlings like China and India take a back seat to these countries where semiconductors and where the memory chip makers are driving things. But as mentioned, there's so much volatility right there, not to mention the geopolitical concerns, the rising oil prices and shocks that you've talked about. And it's interconnected because if you think about some of the big hyperscalers spending huge amounts on CapEx, input costs and supply costs and power costs are going to matter as well in this environment.
And just returning to the weighting of those top performing chip makers, perhaps illustrated by what we saw overnight. Obviously, you mentioned SK Hynix out of Korea, but SanDisk, Western Digital, Micron, we looked at what happened in that session just gone, all up well over 10%.
Yes, you're absolutely right. Those are some of the important names that we're watching. They've, of course, been the top performers in the S&P 500 this year. And it's interesting to see the market's increased reaction, varied reaction to earnings. And if we think back to the past couple of months, for example, we saw Broadcom's earnings beat. We saw a lackluster reaction there. Then we got Micron results, and we saw a fantastic reaction to those results. But then again, when Samsung reported, we saw more of a disappointing reaction. So increasingly, the market is treating these companies as very different companies, and we're seeing that rising dispersion within the market. For example, again, coming back to our Semiconductor Select Industry Index, in April, the dispersion, the cross-sectional volatility in this index reached a record of 160%, which was fascinating to see that. It was actually double that of our Tech Select Sector Index, which showed dispersion of 80%. So just that widening gap between the market's reaction to these companies is going to be important to watch as we get into the height of earnings season within tech.
And more broadly, what are we seeing just in terms of that weighting, particularly when we take a look at tech stocks on the S&P 500? In fact, I think we've got a chart that illustrates what's going on right here.
Great. Yes. I mean, tech is top of mind. If you look at the weight of tech in the S&P 500, it's roughly 38% there. If you look at the Korea BMI, of course, it's almost 70%. So sort of thinking about technology in the U.S., putting a magnifying glass on it when looking at it in terms of Korea. But the trends, like I said, will be important to watch. If you look at the top chip makers, and you called out some of them earlier, like SanDisk, for example, Western Digital, Micron, and you see their growth rate in the S&P 500, while it is less than that of the top chip makers in Korea, the growth rate has been faster within the US. So it'll be interesting to watch the index space and the share that tech and specifically semiconductors takes up. The other trend that I would watch right now at the industry level is just looking at not just semiconductors, but also tech hardware. We have an index for that, as well as software and services, because, of course, this year we saw that the market punished a lot of the software companies. Think back to the SaaS apocalypse, perhaps concerns and jitters about a lot of the software companies becoming obsolete. So that gap at the industry level within tech has widened as well.
So, Manu, what are the implications for investors here, particularly when we talk about that market concentration?
Yes, and I remember we've talked extensively about the environment for active managers, for stock pickers in these conditions. Of course, as we've seen this rotation in the AI value chain away from the hyperscalers, away from the mega caps, and towards the suppliers, which tend to be smaller companies, that can be a potential tailwind in this environment. But of course, I do caution, given this higher dispersion, there is greater opportunity to add value from stock selection. But I always like to say there's greater opportunity for embarrassment as well if you get the picks wrong. So it certainly is a double-edged sword in this environment. The other thing that we're looking at is just the broadening of the trade, the broadening of the market. Small cap outperformance has been a key trend in the first half of the year. The question is whether that will continue to have legs as we approach the rest of the third quarter and the rest of the year. So it'll be interesting to watch, especially given a lot of uncertainties on the macro side, continued geopolitical concerns that you alluded to, oil price shocks, the future trajectory of the Fed, and for some of these smaller rate-sensitive stocks will be something to keep an eye on.
Anu, thanks so much for joining us on S&P Dow Jones Indices.
Thank you.
Let's turn our attention to the local market ahead of the open here. Then we are expecting a positive start, as you can see. SPI futures up around 0.25%. We'll also catch up with the latest corporate releases as well. We'll do that in just a moment. Stay with us for the open.